Fellow traders, are you tired of feeling like you're constantly spinning your wheels in the market? What if I told you there's a better way? Picture this: trading less, but making more money. Now that sounds too good to be true, right?
Wrong.
In this video, I'm about to uncover some of my secrets to trading success. It's all about focusing on the best setups for you and maximizing those results while risking less money. Gone are the days of endless trades with minimal returns. I'm here to show you how to cut through the noise and hone in on what truly matters in the market. So if you're ready to take your trading to new heights and unlock the potential for greater profits with less stress, then you're in the right place. My name's Dominic, right here with the Clover Trading YouTube channel and a mentor over at clovertrading.io. And in this video, we're going to go over how I made $10,000 trading one stock, one pattern,
one opportunity
in 1 month. We're going to talk about how I was able to do this, why I think this setup was so good for me, and how you can implement some of the characteristics of what I've been doing in the last month into your trading to find more success. If you aren't already, this would be a great time to subscribe right here to the Clover Trading YouTube channel. We post videos every single week. We're live every single trading day for Good Morning NASDAQ at 8:45 a.m. And this would also be a great time for you to hit the thumbs up button and show your appreciation for all the free content we're putting out for you. All right, so let's get into the trade. And before we actually talk about the technicals of the Fannie Mae daily chart, kind of talk about where I got in, where I exited, and why I made those plans, let's talk about the version of me, the trader, that was coming into this trade to begin with, and why I thought that this setup was so good for me. This is coming at a time when I am a few weeks into working with Jack Kellogg as my trading accountability buddy, working with him weekly to kind of go over my performance, talk about the trends in my trading, where I'm struggling, where I'm succeeding, what I need to work on, goals for each week. I really encourage everyone out there to have a trading accountability buddy or a group of people that you work with personally, that you're open and honest about your results. So together you can find a way to solve your issues in trading a lot quicker. So
ever dreamed of trading like one of the Clovers? Well, it all starts with the right broker. Clover Trading and Centerpoint Securities have teamed up to supercharge your trading experience by joining Unlock the Power of CP Edge exclusively with Centerpoint. We're talking top-tier trading tools worth over $6,000, all at your fingertips. Get ahead with real-time scanners, cutting-edge news, and a tailor-made trading journal. Experience trading like never before with superior short inventory, personalized support, and interest on your idle funds. Plus, you can get competitive pricing that fits your trading style. Ready to elevate your trading game? Click the Clover Trading link in the description below to get exclusive deals with Centerpoint Securities. Now let's get back to the content.
When we're identifying A+ setups for you, and this is an A+ setup for me, it's really important to understand what that looks like. And what does that look like for me? Fannie Mae is an OTC stock, and it's one of the more respected OTC stocks over the course of my career because it generally trades decent volume. It's a lot more of a real company than a lot of the scams that are out there on the OTC market. I have a lot of history with FNMA. OTC breakouts were and still are, one of my bread and butter setups, and I made a lot of money at the beginning of my career in 2017, 18, 19, and 20 on them when they were a lot more prevalent, when they were doing a lot more volume. And that's just because I really prefer the way the OTCs trade when they're liquid and have good range over listed stocks that we see on the NASDAQ. But in 2019, Fannie Mae was my new biggest trade to date. In early 2019, I made like $23,000, risking like I think $200 or $300 on it. And there are some factors to this specific stock on why it is so enticing, and it makes so much sense to really be paying attention to it when it has a strong daily chart. Behaviorally, this is a stock that you can learn a lot about by just going through its past runs, its past breakouts. A lot of what I looked at in this breakout at the end of December came from understanding what happened in August on Fannie Mae, where you had a breakout that ran 2 really strong green days. It never went red on that move. It was on day 2, it was followed by a gap down and a big red day. There was a lot of things to key into and understand how I wanted to approach the stock at current price levels. But with Fannie Mae, it's being a former runner. It gets super liquid, at least liquid enough for an OTC to be able to trade, has a very very strong. Daily chart, one of the main things for me kind of going off that behavioral analysis is that I'm able to make a very clear plan. I know exactly how this stock trades. I know that on days of the breakout, it has increased volume. It has a morning spike, it goes sideways, and then it either closes in that mid-range or breaks the highs. And then the next morning, I should be able to expect, like back here on this day, a gap up, it never retest green red, and then has another strong, significant day. And that is really important to me on maximizing profits and maximizing risk reward, because I can have a very clear plan where my initial risk isn't going to be the risk level that I use throughout the whole trade, because I know based on this stock's history and the way that it trades, when it has a really strong day into another breakout level, whether it's a multi-day breakout, whether it's a multi-month breakout, when we have a big strong green day around resistance, it tends to go sideways into the close where I can add more shares, move risk up to the afternoon consolidation, and then once we close strong, I can then move risk to green red the following day or the previous close. Previous close is what everything is derived from on the next day in terms of the stock being up on the day or down on the day. And on a stock like this, where it has proven to me time and time again over years that when it goes on multi-day moves, it doesn't go red, it is very easy for me to have that as part of my plan and take that into the current trade and maximize risk reward by doing that. So in answering the question, why was this setup so good for me? I'm very familiar with the stock. I'm able to come up with a very clear plan based on how the stock has traded in the past. It is a very hot stock in OTC. So when it gets moving, it attracts a lot of former OTC traders to it. And at the end of the day, I have the ability to risk very small, build into a winner, continue to move risk up, add more shares, and then take advantage of the way that this stock trades to make a lot of money, risking a very small amount. The two trades I took on Fannie Mae, I started out initially with $300 risk and ended up making, $4,000 on the original breakout and then $6,000 on the secondary breakout. So those are all the reasons why it was such an interesting stock to keep an eye on over the last month and why it demanded a lot more of my attention than a lot of the hot stocks that everyone was talking about on a day-to-day basis. And that brings me into my next topic of discussion, which is having the ability as a trader to avoid a lot of the noise and know exactly who you are as a trader, what you bring to the table, and what you were looking to accomplish from the market every single day. Something I've been working a lot on in my own individual trading after, it's no secret that I had a really rough 2023, is simplifying everything. Jack gives me rules every single week, and one of the most recent rules over the last month has been trying to make 3 to 5 trades maximum over the course of the entire week. And what does that do? It allows my mind to go to focusing on what is the best of the best out there and having the discipline to say no to a lot of other patterns that are moving, a lot of other stocks that are in play because they don't fit what works for me and my big picture daily chart patterns. And by avoiding a lot of that noise, I eliminate a lot of the distraction. I eliminate the ability to go into a massive drawdown period or put myself in the position to take disastrous losses because I'm taking such more fewer trades. I am, dialed into the ones that actually fit my pattern, which means I'm going to have a bigger edge over someone else because I'm watching them a lot more closely. I'm taking notes. I'm studying the filings. I'm going through the news. I'm looking at the levels that matter. I'm going to be a lot more in tune with the stocks that I'm watching if I'm only watching 1 to 2 stocks per week than someone who's watching every single gapper, large caps, mid caps, small caps, everything with a pulse and everything that is moving with some sort of range in the market. But by avoiding a lot of that noise, I'm able to really hone in and focus on specific setups, stuff like Fannie Mae, which like we just talked about is A+ pattern for me. And I can make a whole lot more amount of money, risking a whole lot less, taking 2 trades on Fannie Mae than I ever could trying to figure out an edge on a day one gapper that I don't have any stats on. I haven't back tested. I don't really know how to maximize risk reward on. And although it looks enticing in the moment and it looks attractive and everyone's talking about it and everyone's trading it, there might not actually be an edge there to the long side or to the short side, whatever I'm looking to do with it. I might be 1 or 2 trades away on A+ breakouts or A+ first red days that are going to make my week or month with a whole lot less effort by just trading smarter and not harder. And that kind of leads me into my next point or topic, which is sticking to your bread and butter. When things start to go wrong with traders, they start to question the patterns. They start to question, what they're watching in the market, and they generally make very volatile changes. They go from shorting first red days to buying day one low floats or buying panic dip buys to shorting parabolics. In reality, you're going to create more confusion for yourself because you're creating more inconsistencies. You're adding more variables to the pot instead of looking at, okay, why am I struggling right now? Like, what are all the things, the precursors to the end result? Is something going on in my personal life? Is my daily habits and what I'm bringing to the market all altered in some way. For me, it's going back to bread and butter, not when things get hard, trying to add more things in. You're going to create more confusion by doing that. And you might wake up 2 or 3 months down the road going, what have I been doing the last 2 or 3 months? I'm taking more trades than I ever have before. It's even harder to find the nuances of what I'm doing and why I'm struggling and where I'm actually succeeding and making money. But when you stick to only the patterns that you have mastered, that you've studied so hard for months or years, and you slow everything down and you focus on that, most people I know who've been trading for at least 6 months, whether they're newbies or intermediates, either they have had decent success or not that much at all, they know what they're good at in the market. They know what makes the most sense to them. They've had trades where they've made good money risking small amounts. It's just, can you avoid all the other stuff in the meantime and just focus on that? So now that we've kind of covered all the prerequisites to the trade, understanding the trader at hand, what I bring to the market, how consistent or inconsistent I've been, assessing all of my psychological problems, how I'm trading that week, how I'm trading that month, am I following my rules, am I in a big drawdown, am I trading well, sticking to your bread and butter, avoiding all the noise, and understanding what truly makes an A+ setup for you. Let's get into the actual Fannie Mae trading. And as you can see here, a daily chart of Fannie Mae going back to 2023. And what really puts this stock on the map is this move from 44 cents all the way up to whole $1.90. It happened on a multi-day breakout right here over this 52-cent area. It goes for 2 full days. And then again, I'm going to really focus on the behavioral here. So what does it do? Big, strong green day, closes near the highs, gaps up small the next day, never tests green red, and then has a really strong day, pushes even bigger and extends itself further than the first day of the breakout, and then ends up closing right at the highs before gapping down and having a very severe red day. This was something I saw happen. I think we were at the Boston boot camp when this move was happening. Many months go by in between, and every now and then I'm checking in on it. Like I said, it's one of my favorite OTCs when it's moving to pay attention to. I'm not really watching it to actively trade it anywhere in here, but I am watching it develop and set up. And, somewhere in this range here, someone brought up to me that, Fannie Mae's daily chart really looking quite nice. It's an ABCD. You have these higher lows being set, and then finally a really tight range between the 70-cent area and 75-cent area, with the main big voluminous liquid day at 90 cents. That is kind of that multi-month breakout that is going to be the toughest for this stock to break through. So my initial thoughts going into this move right here is, what is the main risk level that matters? I just released a video lesson for all the 4-leaf clovers out there called How to Be a Good Loser, and why being really good at losing and focusing on risk first makes you one heck of a winner when things start to go right for you. And so identifying the key levels of risk for this one, since it's not like a multi-day breakout like I'm typically trading, where the stock goes on a 1 or 2 day move, sets a top, has a day or two of consolidation, then immediately goes and breaks those highs. This is much more of a slow developing multi-month setup with, multi-week levels here at 75 cents and the big multi-month level at 90 cents, where I think real volume is going to come back in. So on this initial position, I'm thinking, how can I get full size, which meaning 1R risk, not going crazy with it, not going too conservative, with the idea that I want to be in this thing as long as it's holding 70 cents for a move towards 90 cents, for then maybe a multi-day breakout sets up there. And while having an early entry with, my $300 risk or whatever it is, by then I have such a great entry when we start to consolidate up near that big level that maybe I can double or triple down and continue to be risking 300 or 0 if my risk continues to get high enough and my average is low enough to really maximize the position. In this case, I started building into 75 cents, risking 70 cents. And then once we have this really big volume day, right, as you can see right here on the stock, starting to match the previous run right into multi-month resistance. We also have an intraday chart over the stock. Like I said, when Fannie Mae gets going and it starts to set up on its moves, it goes straight up in the morning, sideways all day, closing near those highs. And once I started to see that action on this day right here, 12/22, I completely threw away the really slow and developing idea of I want to be in this thing for a long time and said, I think the move is happening right now. We have the daily chart level at 90 cents. The volume has increased a ton from 75 to 90 cents. We're closing sideways near the highs. Let me move risk from 70 cents up to wherever afternoon consolidation is that day. I think it was like 84 or 85 cents. Get more size on that position. Now I have a break even trade. So where I started out risking 300, now I'm risking break even, and I have really, really good risk reward if this continues higher. And I'm going to treat this day right here just like this day one of this breakout back here. And this is how a lot of the best breakouts really develop for me, is understanding that taking this move, expecting this move to happen on the following day and preparing for it. So getting my full size now up here, adding, moving risk up, and then expecting that when this daily chart level breaks here, that we shouldn't go red ahead from here. So that's my new risk right now. And then because of this most recent move, I can tell that day 2 was also the highs that the stock put in. What did I do on this day? I held long and strong all day, sold my position into the close 113, 14, 15 on that day, expecting the next day to be a slight gap down and a big red day. And even if it didn't and it continued higher, at least I was playing the percentages, playing the odds, using this stock's behavior to analyze what to do. And then from there, I still would have made really good profits, really good percentage gain on a trade that I started risking $300. On the most recent breakout here, it was a stock that never left my watch list. We're still holding above 90 cents. We're holding the whole dollar key level of $1. A couple weeks go by of real big consolidation. I talked about this in my webinar this last week. On OTC specifically, I really want to be building in my positions at support or at resistance. The way I like to trade on multi-day breakouts is build into support, use the death line as risk, this 93 cent area right here with an average around 1 to 105, and be there for the day it breaks out, all while using the same behavioral analytics that I used previously in saying once the stock breaks out and the time is now, and I do believe the 1 or 2 day move that we're going to get on this is happening, that's when I want to add my size. That's when I want to move risk. And in this case here, I built in 1 to 105. I did have some oopsie rule breaks where I did take some small losses along the way. As you can see right here on this day on 118, as the stock was grinding towards the breakout level, did have a morning where it went from 110 all the way down to 1. I kind of adjusted and adapted my position and then got myself to the point where I said, I'm not touching this stock again until it breaks below 93 or breaks above 115. On the day we get that breakout, I add more on the breakout day, move risk to low day on that day, which was that 109, 110 area. And then the whole idea here of 1 to 115 area is where the stock's building from. This was kind of different than this day right here, as these green days were a lot bigger, from 93 to 115. Maybe thinking best case scenario here is $1.50. And I will be honest, the secondary breakout here was not nearly as clean, not nearly as easy to handle and manipulate as this previous breakout here or this initial run back here in August of 2023. There are theories to that, probably being that once you get so many good looking breakouts, they can tend to get overcrowded. Too many people are looking for the same thing, so too many people are all on the same side, and then you get that kind of everyone risking the previous day's close. And on this day right here on 123.24, we get harsh sell-off in the morning. The stock grinds all the way back, and then we end up making new highs on that day. I'd kind of planned and prepared for that. On this breakout day, because my average was so low, being right around 115 or lower, I didn't want to move risk until I'd kind of seen that had played out and that I knew that it wasn't too overcrowded. But this morning panic was all that there was. It was in the first 5 or 10 minutes and immediately caught itself at 120, much higher than the breakout level, which was going to be my stop if it did break below that, built back. And then, like I said, this was a much harder breakout to be a part of. It wasn't just 2 perfect green days and then you get your sell off. So in this instance, I gave it an extra day or 2 to kind of develop as long as it was over this 120 area. Again, that's why I want to be building in towards support, being in on the days that I expect the moves to happen. That way my average is a lot lower than where the choppiness happens. And then I ended up taking off my entire position into 140, thinking that's still a phenomenal move from the 1 to 115 area, that this breakout isn't happening like it did in the past. And even though it wasn't a perfect move, and on that day it closed at 138 or 136, we didn't just get a small gap up and a move towards 160, 170, which I would have made a lot more money on that move. But instead I had to constantly adapt my plan, go with what the stock was giving me. And then once I'd given it enough time and I no longer thought the move that I was going to get is going to happen, I still take it off at a good price, a lot higher than where I bought, and was able to make even more on this breakout that I did on the original breakout. So that's kind of all the technicals that go along with Fannie Mae, why I thought it was such a good setup, why focusing on this stock could make me more money than focusing on all the noise that doesn't fit my daily chart patterns, why even though this breakout wasn't as good as the initial one, I was still able to make more money because I was paying such close attention to the stock based off of the run that I had back in 2023, and being able to use all of those little pieces of information as an edge for myself and really able to maximize risk reward on a play here and, make in 30 trading days, $10,000 plus, risking very minimal while not even actually doing the best I possibly could. The stock did go higher than where I sold, and it wasn't the move that I was necessarily looking for, but on a failed breakout attempt to make $6,000 is really phenomenal in my opinion. And taking into consideration everything I talked about, from avoiding all the noise, focusing on risk first, being a good loser, focusing on your bread and butter pattern. These are all things that are going to lead you to success, and they're going to lead to more consistency because you're going to have the base layer of discipline and consistency. And when you bring that to the market market every single day for months and months on end, it is very difficult not to see growth in your personal trading. So that's the lesson for today, how to make, for me, $10,000 in 30 trading days on one stock by trading 2 different breakouts on it. Doesn't matter if you're a breakout buyer, first red day buyer, first green day buyer, whatever it is, stick to your bread and butter, focus on mastering that, maximizing the trades that do fit your criteria, getting your full size, focusing on your risk first, and then letting the trade play out, really maximizing those winners. So that's the trade for today. That's the lesson. I hope you all are having a great 2024, and I look forward to seeing you all in the next one.